Hello everyone, welcome back to the video analysis series. In the last video, we have talked about Petronet LNG. From there, I got an idea to present analysis on another fast growing sector, CGD, which is City Gas Distribution. CGD companies in India are like any other oil marketing companies. They provide CNG for automobile, just like OMCs have fuel pump where we get petrol and diesel. They also give us piped natural gas, which is PNG for cooking oil, just like OMC companies give us LPG cylinder. And then the CGD companies also provide CNG for industrial usage, like industrial plants, manufacturing facilities, and for commercial establishment, like restaurant and food joints. Today we will be talking about Indraprastha Gas Limited (IGL). It was incorporated in 1998 as the sole gas distribution company for natural gas in the region of National Capital Territory (NCT). GAIL and BPCL are the promoter of the company, with each one holding 22.5% stake in the company. IGL started its operation in NCT in Delhi in 1999 with only 9 CNG stations, and that point of time it had only 1000 PNG customer. Today IGL has its operation in Delhi, Noida, Greater Noida, Ghaziabad, Kanpur, Muzaffarnagar and Ajmer. Right now they have about 652 CNG stations, about 18.9 lakhs PNG customer, and more than 7400 industrial and commercial customers. IGL has maintained their dominant position in gas business in Delhi. Their marketing exclusivity has ended in year 2011, and it has been more than a decade since their marketing exclusivity period has ended, though they have maintained their dominant position in the gas business in Delhi. Now their infrastructure exclusivity period will end in December 2023. We believe that IGL dominant position in gas in Delhi will remain even after infrastructure exclusivity period ends. It will become far more difficult for any new player to lay their pipeline and infrastructure in city like Delhi, because the city has become more densely populated than what it has been when IGL laid their pipeline 10 or 20 years back. So it will be convenient for any new player to use IGL infrastructure and pay a nominal fee. Government might also ask IGL to have 20% of their infrastructure as dedicated for third party usage, and they might come up with some guidelines in terms of pricing, how to use, how to let their infrastructure to be used by third party. So in that sense, we see that IGL business will be very well protected in the future as well. Delhi is very unique market for CNG in India. City is one of the most densely populated city in the world. It has one of the largest fleet of private vehicles in India. And then they are fueling one of the largest fleet of CNG buses in the world. Beside Delhi, IGL, as we have discussed earlier, they also have operations in Noida, Greater Noida, Ghaziabad, Kanpur, Muzaffarnagar, and Ajmer. Further, government used to conduct round of awarding new geographical areas to CGD companies. So, from 6th to 10th round, IGL has won geographical areas like Ajmer, Pali, Rajasmand, Rewari, Karnal, Kaithal, and Fatehpur, Hamirpur, Meerut. So these kind of city will add to the future growth of CNG business for IGL. After this, in the 11th round, IGL has won one new geographical area, and one of their joint venture company, Maharashtra Natural Gas, has won two new geographical area. So this new areas from 6th to 11th round will aid to the future volume of the company, apart from inherent growth which they will experience in Delhi and other areas where they already have operations ongoing. Let's look at few of the investee companies of IGL. IGL has acquired 50% stake in Central UP Gas Limited for 68 crore. CUGL has operations in Kanpur, Bareilly, Unnao and Jhansi in Uttar Pradesh. Besides that, IGL has also acquired 50% stake in Maharashtra Natural Gas Limited for 190 crore. MNGL has operation in Pune and adjoining area. So in IGL balance sheet, there is about 260 crore which is sitting as investment in these two companies. Mind it, MNGL is different from Mahanagar Gas Limited, MGL, which is a different CGD company in India, listed CGD company. They have operations in Mumbai and adjoining areas. Let's look at reason for being bullish on CNG. Government makes a firm allocation on CNG and PNG consumption from domestic production of natural gas. Every year, government ensure that requirement of CNG and PNG will receive to their fullest before the allocation is given to non-priority sector. So CNG and PNG consumption has been regarded as a priority sector in India. Normally, gas allocation to CGD every year is consistently growing higher from domestic sources. However, in FY23, the allocation has been kept as in volume terms has been kept as same as last year. Since the allocation from domestic production has not been increased in this year, CGD companies has to purchase higher proportion of supply from elsewhere. This will increase CNG selling price for IGL. Government also need to balance the demand for natural gas producers and buyer and seller. Domestic APM price, the administered price mechanism, is linked to the natural gas price of UK, US, Canada, and Russia. There are other industries like fertilizer which also need higher allocation of domestic gas as international prices has gone up, and they also cater to the priority sector like agriculture. Government need to ensure that fertilizer plant also receive cheap supply and consistent supply of gas. So in that sense, CNG companies also stand in a very comfortable position in terms of getting higher allocation for domestic gas supply, which will be cheaper to sell to the Indian consumer. Moving from volume allocation from government, CNG is one of the cheapest auto fuel compared to other version like petrol and diesel. This is because government taxes on CNG has been very benign. Delhi earlier they used to have zero taxes. Then a few years back they moved to 5% VAT for CNG in Delhi. Likewise, recently Maharashtra government has reduced the CNG taxes from 13.5% to 3%. So this makes CNG as a very economical fuel, and government also want the city to move from petrol, diesel to CNG as it has been a more cleaner fuel for the state and the country. CNG is being more affordable. We can look from this data as well that CNG price per kg would be some 40-50% discount to petrol price per liter, and thereafter CNG give better mileage, better fuel efficiency for the vehicle. So all in all, a petrol car runs about 12-13 kilometers, while a CNG car will run somewhere around 19-20 kilometers. Hence you can save somewhere around 40% in terms if you are using CNG fuel against petrol in a car, and that's why the city is adopting CNG. Besides economical, pollution norms is also one reason for being bullish on CNG. Pollution norms are becoming increasingly more stringent in most polluted and densely populated city in India, and CNG in any day is less pollutant compared to other fuel, petrol and diesel. Hence, the cost of running a petrol and diesel vehicle will keep on increasing, and as government introduce stricter norms, like they moved from Euro 6 norms from Euro 4 few years back. And CNG gas burns cleaner fuel. They emit lesser carbon dioxide when compared to traditional fuel. And CNG being itself in a gaseous form, it mixes evenly and easily in atmosphere. Besides that, there has been some regulatory support which has been coming from Supreme Court, especially in Delhi. They are banning any kind of diesel car registration above 2000 cc. They even asked that commercial vehicle which has been more than 10 years old should not apply in the city of Delhi. and converting all kind of city taxi from petrol or diesel to CNG. So these kind of regulatory norms helped for faster conversion to CNG in Delhi. After auto CNG, let's look at PNG, which is used for cooking fuel in household. Prominent cities in India are replacing LPG gas cylinder to piped gas, which come hassle free. You don't have to worry about cylinder inside house, so it is more safe in case there is fire. User don't have to worry about replacement of gas cylinder, or running out of gas, so it is better on convenience. And above all, it is more, the pipe natural gas is economical as well. The cost is somewhere around 30-40% cheaper to the LPG gas cylinder. Let's look at the sources of gas, natural gas for IGL. Decent volume of requirement for IGL has been sourced from domestically produced natural gas. The APM, non-APM, and GAIL PMT volume are all domestic source. Hence, they ensure timely supply of the natural gas to IGL. RLNG is regasified, which comes from LNG terminal through import of liquid natural gas. Besides source, also looking at where the gas from IGL is being used, the usage looks like fairly stable, wherein CNG contributes more than 70% of the volume, which is mostly the auto CNG. Domestic consumption, which is PNG, is increasingly going higher and higher every subsequent years. And then there is small source which has been supplied to industrial and commercial usage, and then they also supply to other CGD companies. Let's look at operational profile of IGL and compare it with other CGD listed companies in India. Looking at the CNG gas station, IGL has about 652 CNG gas stations, which is higher than larger market cap companies, Gujarat Gas, which has 564 CNG stations as of today. Then if we look at the PNG connections, which is the domestically piped natural gas, IGL has about 18.9 lakh customer, while Gujarat Gas has about 15.7 lakh customer. Even if we compare total volume of CGD companies, here Gujarat Gas is little higher than IGL, but significant volume of Gujarat Gas comes from industrial usage because they are located in Gujarat, and which is the prominent users of natural gas in India. And industrial usage comes at a lower margin. So for IGL, it is mostly the auto fuel, the CNG, which has been used by their consumer. Let's look at the revenue and EBITDA growth for the sectors and three CGD companies in India. The revenue growth for IGL has been about 13% since FY17, which can be construed okay. Though this 13% growth has been lower compared to the 19% growth of the sector of the three companies combined, but this is due to Gujarat Gas, which has been growing at a faster clip compared to the other two companies. Moving down further, if we compare on the EBITDA growth of the companies, the IGL performance has been in line with the sector. They are being growing at the same rate at which the sector has been growing. Here we see that outperformance of Gujarat Gas has not been as steep as it has been in the revenue, because Gujarat Gas cater more to the industrial sector where the margin has been low, so their revenue growth has been much higher, while their EBITDA growth has been bit subdued compared to their revenue growth. Now, if we compare all the three companies in terms of how much they contribute to the sector in terms of EBITDA and how much they have the market share in terms of valuation and market cap, we see that IGL has been consistent in terms of having 38-40% EBITDA share and 38-40% in terms of market cap. Mahanagar Gas has a very low valuation, has a very low market share in terms of market cap. This is because their EBITDA growth has been very subdued. They have been growing at a very low pace. While this has been compensated by Gujarat Gas, which has shown a higher growth in EBITDA. So how we were looking at comparison of market cap and EBITDA, we were trying to see how much is the market share of any of these companies in terms of combined EBITDA, and how much is the market cap of any of these companies when we combine the market cap, when we pool the market cap of three listed CGD companies. Now let's look at valuation. Currently, the valuation looks inexpensive at trailing 18x EPS multiple. Though the dividend yield is less than 1% for the company, this is because the company still is into the investment phase. As we can see in its balance sheet, the fixed assets, including work in progress fixed assets, has been growing at 15.5% for past few years, and nearly 25% of the assets are in WIP. So they are not contributing to the revenue and EBITDA profile of the company. And besides, 25% of the fixed assets is still into WIP mode. The company is available at 18x multiple, and they are generating 20% ROE. Even when we compare with the historical PE multiple, we see that the historically the company has a long-term trading average of 30x, while currently it is trading at 18x, which is about 40% cheaper to their historical average. There is hardly any kind of inventory or receivables in the balance sheet, so company churns fast cash. It takes about 1 to 2 crore to install any new CNG gas station, and this cost is fully recovered in 1 to 2 years time frame. So till there is enough demand for volume of CNG, the business for the company should do well. Currently the international gas prices are being very high, and so the source of raw material, the cost of raw material has been increasing steeply for CGD companies, and they are been bit slow in terms of passing the new selling price on to the consumer. Hence there might be a margin compression for 1 or 2 quarters, but in the long term it should nullify. The gas selling price will increase, and they will be able to maintain their historical margin. So this provide a better window to enter into CGD companies as investment. Now IGL has about 1000 crore of cash balance, which they might use to acquire small CGD companies, or they might use it to increase their stake in their two investee companies, Maharashtra Natural Gas Limited and Central UP Gas, where they have about 50% stake right now. Let's look at few of the risk. IGL is expected to keep 20% of its pipeline infrastructure for third party once the infrastructure exclusivity period ends. And if the open access infrastructure for third party fall below 10% of the capacity, then IGL would have to lay further capex and pipeline. This will hurt the return ratios for IGL for a while, and OMC can have gas distribution of their own using open access from IGL. So this can be one of the risks. Besides that, we also hear the risk related to electric vehicle, but that is bit far fetched, because electric vehicle, the adoption will be more on the two wheeler and the three wheeler side, while the four wheeler and the buses and trucks, it will be very difficult and expensive to convert them onto the electric mode. So in that sense, we see that the auto CNG, the business for IGL will be protected for at least longer time frame, till we see that there is some development and innovation, so that the car EV is mass adopted in India. Yeah, that's all from my side. Hope you enjoyed the video, and in case you like the video, please spread the word. Thank you.